As a trader, we always crave for consistency in our profits, consistent compounding of gains in our trading account, as well as consistent income from trading month after month. But what if I tell you that will never be the case? In trading, there will be long bouts of sitting and waiting around. But when the right moment comes, there will be frantic buying and selling to secure some profits. And right now, in this week, I do think there are a lot of juicy deals in the market for us to snatch up, and this coming week is going to be very frantic, especially for the long buyers or the long traders. Hi, I'm the Stock Estate, and today I'm going to be presenting 5 swing trading stocks for this coming week, and as well as give you my thesis on those, as well as thesis for last week's picks, so that we can stay disciplined to our craft and keep ourselves accountable. Alright, let's not waste any time, let's get on with the first stock. Okay, the first 2 stocks we're going to talk about is in the internet industry, alright? They are dealing with things in the internet, okay, communication through the internet, alright? And let's take a look at CARG. Okay, CRGC is a company that you can see that has been growing massively over time. They have a lot of good sales that are coming in, and as well as growing revenues year over year. But again, in the short term, right, fundamentals might matter in the very long term, but short term again is influenced by demand, supply, a lot of the short term fluctuations, as well as emotions and sentiment on the market. Okay, and right now you can see that, okay, after a super bullish sentiment in March, everything kind of came down a little bit. They found a somewhat bottom and have been trading in a range. Broke out, go back to the range, and since this area onwards, okay, you can see there's an increase in buying sentiment over here, which leads it to get a triple top over here. Okay, the double top is often known as, you know, the top that will break down, right, to become a more bearish one. But in my opinion, after scouring through so many stocks and been swing trading for quite some time, I do see potential in triple top breakouts, because once the market tests a certain resistance for the third time, that's where we gotta be very mindful, and there's a very high probability of it breaking to the upside, especially, right, if a quick glance through at its fundamentals, it is a very strong company that are growing year over year. Okay, that means there's a lot of institutional interest might be interested in this kind of company. They are growing and have sales and have their earnings down, and they're not a small startup company that is still losing money in sales. And this again gives me the more thesis that this is gonna go to the further upside. Massive selling pressure always, you can see from here, CRG 1, 2, 3, and 4, massive selling pressure. But recently, okay, you can see that although last week, right, was pretty bad. Okay, if you look at the major markets, right, Dow just, okay, Nasdaq just, okay, NYSE just, S&P 500 just got its most longest pullback streak of the entire month. Okay, and as well as small caps and S&P, big caps and small caps and mid caps all got obliterated, alright? Everything's pulling back. But however, when all of these are pulling back to its support area near the 13,000s, as well as for the mid caps around 26,000, 2600s, these are the numbers and these are the opportunity and demand zone areas which we want to capitalize, and as well as buy frantically, right? This kind of opportunity comes at this kind of moment, because there are long times where, you know, it's staying somewhere at the top. We are going to take a more risk off approach. We're going to stay out of the markets for a little bit and wait for it to come down. And I can bet you, okay, if it comes down to this supply area over here, once there's buying sentiment coming back in around these zones, you can see a lot of frantic buying from the institutions and everyone else flooding money back into the market. Okay, so that's the thesis for CARG. Okay, again, if I want to enter this this on Monday, right, what I want to do is I want to wait for a small pullback to improve my risk to reward ratio, okay, preferably around the $30 range, and after that, okay, I will actually set a stop loss near the previous swing low, or maybe around $28.83 around there, to give it a little bit of room to breathe, then swing it for the breakout to its all-time highs around $35, or even set a trading stop loss to ride the wave up, because I do see this is a start of a new trend for this company CARG, CarG, which is in the communication services industry. Okay, next company we're going to look at is an app that we are very familiar with, all of us are very familiar with, Snapchat. Okay, Snapchat is a pretty decent company, right? Pretty cool company. And Snapchat, right, has been, this company has been doing pretty well. Their sales have been blown out of the waters, which, you know, you can see it from this huge gap up over here, insane gap up, because they really blew expectations out of the water. People think that, you know, Snapchat is kind of outdated with all the new apps coming in like TikTok, blah blah blah. But they really did really well, okay, in last quarter's earnings, and it broke out. And since then, right, the stock really hasn't been moving much, okay? The market is just being volatile, it's just consolidating, and recently, you can see from here, right, there has this small little doji candle over here, and it continues to consolidate. This is what I call when it has the smallest body of candles out of the entire last 7 candles. This is the squeeze, right? And this signifies either a break to the upside or the downside. Okay, has been consolidating for a while now. Okay, and I do see, okay, this company breaking up to the further upside. Otherwise, okay, our stop loss will be set very, very tightly, okay, below the previous low, previous demand selling off over here, which is around $71. I'll put my stop loss around $71, definitely $71, and the upside will be a breakout and a trailing stop loss. So again, this is the first kind of company we are playing are more of breakouts. You can see that CARG and Snapchat, they are both more of breakout companies that we are playing currently. Alright, next industry we're going to talk about, okay, we're going to talk a little bit more about of the defensive industry that I think, okay, have a very strong potential for the upside, as well as all these companies being in more of the bigger cap zone. They are in the more on the S&P 500. They are the more stable caps. First company we're going to talk about is TROW Price Group, right? TROW Financial Asset Management, right? The financials. Okay, financials has been on a roll this year, right? Insane run up from last week, right? Insane run up from all the way. You can see if you invested in it, okay, in last year, December, right, you probably have doubled your money in financials, okay, and it's really been a very consistent upward trend, very similar to the S&P 500, okay, and I see a lot of upside to this, especially after this recent sell-off, and it hit a certain trend line over here, and it's currently coming up a little bit more again, okay. TROW is a market cap of $49 billion. It's a big cap company, a very mega cap company, and this company definitely have more potential for the upside, although the immediate profit-taking target area will be around 225, which represents around a 5% profits from its current price. Not a lot, but again, if the market turns pretty sour this coming week, okay, I would definitely be swing trading TROW for a more safer kind of play. Okay, the previous plays like Snapchat and CRG are more riskier plays because it determines the overall market conditions will support it for a breakout or a breakdown. But again, for this kind of more stronger companies, bigger cap companies that are bouncing off a trend line, okay, these are more safer plays that I want to play for this coming week if the market turns sour. Okay, next company also inside the financial asset management industry. This is JHG. JHG is Janus Henderson Group. It's also in the financial asset management in UK. And this company, again, very similar charting to this company, except this company is actually in the smaller cap company or the mid cap companies of $7.2 billion. And this company is more smaller. And again, we have to really look at the S&P mid caps and small caps, right, to determine, right? So small caps, if small caps continue to and mid caps continue to sell off this coming week, right, then we probably will not want to go into JHG, and we really want to play TROW. Okay, but however, right, if the market next week, right, has been really rough on the S&P 500, right, really rough on S&P 500, continue to sell off all the way to the 4400 number, and whereas the small caps and mid caps are actually rebounding, then we really want to play JHG as a mid cap play. Okay, so these are two companies in the safer risk off as well as the asset management industry. Okay, last industry we're going to talk a little bit more about is actually in the basic materials, chemicals industry in the United States. And these are industries that are doing really well when it's the start of the economic cycle. Okay, when the bond yields are kind of, tapering off, they are kind of staying stable, okay, and slowly, rising, okay, staying there. And the start of the economic cycle after the recession, right? The companies that are doing pretty well most of the time are consumer discretionary as people are spending more, okay, energy companies, energy stocks, as well as basic materials companies. And basic materials companies, these companies are dealing with chemicals and they are in the basic materials industry. And I think they have a lot of upside to be made, okay, for the rest of the year ahead, all the way to November, December. They have a lot of upside to be had, okay, in this small industry. So first company, TROX, okay, the other company was TROW, okay, this is TROX, okay. So this company, TROX Holdings, this company, pretty decent financials. Look at all these delicious financials, right? They are returning year over year. Only thing that's a little bit sour is their earnings quarter by quarter are a little bit not doing so well. Okay, that's why for this steep sell-off over here. But although this was very likely an overreaction play where the market kind of thought about it, consolidated near the bottom, this is the lowest where the value hunters start to come in, right, and start to buy and push this price up. And when they hit this certain support area over here, massive buying pressure comes out. Okay, and a little bit of selling off, but again, buyers are stepping in to push the price up. So again, this company from the $20 range, right, I can see easily, okay, it going to around $24 for a 10%, 20% profit from here. Okay, very easily 20% profit from here. Okay, and it can even break to the further upside if it consolidates further to the top. Okay, stop loss I'll put around near the $19 range at the bottom over here. Even $19.50 would be good. Okay, and this little cup and handle formation I think is really, really beautiful. Okay, if we are able to swing trade this, and if the market treats us well for the chemical sector for next week. Okay, and this is in the small cap industry of $3 billion. Okay, small cap to mid cap. Alright, last company, right? Another sympathy play to TROX. Okay, this is in the basic materials specialty chemicals industry, right? And this company is a little bit bigger market cap, around $8 billion. And this company currently is after this massive, sell-off over here, not really super big, okay, but there's a decent size sell-off, okay, from its huge run-up, right? Consolidating, okay, and I can see higher highs being made over here, higher highs, okay, touch the support trend line over here, higher highs, okay, and right now, some buying pressure is coming in. Okay, and from here, $47, swinging up to the $50 range, that's a decent 10% profit for this bigger cap play itself, OLN, All-In Corporation. Okay, decent financials not as well as the previous company, but again, it's still doing pretty well. It's not complete trash. And the short term, again, fundamentals doesn't have a lot of weight. There's some weight in it to understand and pick the right companies to trade from, but again, we really want to look at the demand zones and the supply factors for us to trade this company. Stop loss have definitely got to be in because short-term market fluctuates, very volatile. Okay, so we're gonna set our stop loss around $46. I'll put around $46 for a stop loss. So if we got stopped out, okay, then we might want to re-enter at a lower price again to swing to the further upside for OLN. Okay, last week's picks, right? IGT, okay, last week was completely horrible mess of a pullback from all different sectors. Every single sector was red. You can see from here, right? Woo! All red over here. Woo! Delicious! Very deliciously red. Okay, but our stocks are actually holding up pretty well, honestly. Okay, so International Gaming Corporation, right? Okay, you can see that from here to here, didn't really change much. Nothing much happened. Okay, I actually bought in, okay, according to the plan, and it's just not been moving at all. So again, no losses, no gains, just a little fluctuations here and there. Okay, OII was a same thing. All right, we bought in. Okay, it's down currently around. We bought in again around the support level. We wait for the OII, wait for it to pull back. You go and check my last week's video. We wanted it to pull back a little bit, and we entered. And currently, it's down around 2% ish. Okay, not much. Okay, we really wanted it to wait for it to consolidate. Next week, it will come back up strong, and we will take our profits. Stop loss is a little bit below that, okay, because you do want to give us some room to breathe. SoFi, okay, I do say that we want to let it go all the way to down to the support level before we buy in. Okay, so again, it is at $15.29. Haven't really reached our buy area around $15. So again, I'm staying out of this trade for now. Okay, until it hits to a bit lower prices at the support level, then I will buy it for a short squeeze play. Okay, and last company, HRB, is a company that I actually took a loss last week because I got stopped out on my trade. Okay, I bought in around I saw some strength. Okay, actually bought it on Tuesday open, right? And I got stopped out around here. Okay, the bottom over here. I got stopped out for a 2-3% loss for HRB, okay? Because I really didn't expect such a massive pullback for the S&P 500. But okay, as I said, stop losses are there to limit our downside. And it's very important, to take losses because as swing traders, we are never gonna get 100% win rate, right? We're never gonna 100% win all our trades. Okay, you must take into account that we will lose some trades. Okay, as long as we win 60% of the time, but each time we risk a trade, we are taking 2-to-1 risk-reward ratio. The risk-reward ratio is a little bit higher. Okay, we will make money over the long term. So again, don't be afraid of losing money. Okay, with your stop losses because you will be making back that loss with the capital that you have being stopped out instead of getting your profits or your capital being trapped by companies, okay, but they are back holding, right? Example, if I'm back holding HRB, right, and maybe for the next couple of months, right, it starts trending downwards, and with that profits, I could actually make 10% gains on other stocks every week, right? But because of me back holding that company, I'm just holding it and not doing anything with it. And actually, the loss, right, is not just the loss of you, holding the company, right? Even if it does eventually come back up to the price where you bought it at, okay, the time where you have, selling it, right? You selling it, actually using it to gain back the stocks, that would be actually, much better if you actually sold it and use it to gain back the gains on other plays that have more potential in the meantime. Okay, and with that said, right, I hope you guys enjoyed today's video, okay? And as I said, this market right now, right, last week was a more calm week where, you know, the market is really very whipsaw, okay, it's coming up and down, okay, everybody's waiting for that pullback. And again, we want to wait for the pullback to happen before going in strong, right? Last week I was going a little bit more cool, okay, a little bit more light on my positions because I sensed that the market's about to pull back. But when the market actually pulls back, right, that's when we want to go aggressive on our positions, right, set our stop losses, right, and capitalize on opportunities that have been presented to us as swing traders. Okay, that is what we want to do as swing traders, okay? And as well as I said from the start of the video, right, if you want consistent profits, okay, swing trading is not going to be a one that gives you like always 2,000 per month, 2,000 per month, 2,000 per month. That's like a pipe dream, right? You got to be ready for months that give you negative 1,000, some months give you 5,000, some months give you 3,000, some months give you negative 2,000, then average it out, you get 1.5 every month. And that's why I encourage, you know, some beginner swing traders to, you know, keep their jobs, you know, do your jobs first, okay, and get that consistent income so that you're not so stressed about, you know, swing trading and needing it to be able to generate income for you, because that will lead you to make a lot of forced trades where you force a trade and you trade because your hand is itchy. Okay, you, like example last week, right? Maybe you look at the small little pullback and you're like, oh my god, I gotta trade something today, I gotta enter orders. Okay, in fact, okay, on a few days, right, and like Friday itself, I didn't really enter any orders. Yesterday, I was just chilling because I was just looking through the market. There's not a lot of good opportunities. I do think that the pullback coming out, I do want to see a bounce next week before entering, right? Because I'm a little bit more conservative trader. So again, for me and my style, okay, I decided to sit back and relax and just close my computer for the day. Okay, and that's, I think, one of the best styles that suit me the most, and I do hope that you find your style as well. And with that said, I thank you for watching the video, and stay safe, trade safe, and I'll see you again in the next video, everyone. Stock is stayed up.